Angus, I want to get into one of the quotes that came from the report, and it said that Middle Africa is under research and as a result misunderstood or overlooked by international institutional investors. So just talk to us a little bit about how a report like this would help in terms of having people and investors know a little bit more about what's happening in Middle Africa.
Sure. Well, I mean, first off, this is a copy of the report that we produced about 10 days ago, and it provides a lot of basic information to the markets in Middle Africa, but I think a lot of that basic information is quite lacking to investors in OECD type economies, and the report is designed to help bring information to them that they may not otherwise have, because in some ways Middle Africa is very under-researched. There is a lot of negative perceptions about the economy, and a lot of the investment community may have the wrong ideas about what is going on in some of these economies and just focus on a lot of the media images which are very negative and stereotypical. We want to try through our report to bring to the attention of investors that already know about Middle Africa, but also those that may be new to the scene, some of the investment opportunities, some of the areas that they could become involved, to try and realize some very attractive high yield opportunities.
Angus, one of the things that Ecobank does concede is that investing in Africa is complex. It's not easy, and you do need to know where you're putting your money and some of the dynamics that happen on the continent. Just tell us about some of the things that you have put in this report that would be able to talk to that issue of complexity.
Well, as you rightly said, it is a very dynamic, complex continent. There are 34 different countries that Ecobank is operating in Middle Africa. Each one of those countries that we operate in has an independent banking license. So there are a lot of bits of information in the report that provide investors with data and information how to invest in fixed income markets, for example, or what some of the exchange rate regime challenges may be, or the negative perceptions that surround FX trading strategies that may not actually arise. So a lot of the information we try to provide in quite a simplistic format to just make aware to the investment community some of the challenges that are easy to overcome from our perspective by investing in these markets, by providing information on interest rates, on monetary policy, the fiscal stance of the government, and also exchange rate policy and what implications that may have for capital flows coming in as well as coming out of the country.
Angus, I want to focus on two countries now, the DRC and Malawi, and it says in 2011 that was the first time that there was profitability in the region that those two countries are a part of. What is happening in the DRC and Malawi that it has contributed so much to a profit gain in the cluster that they are in rather?
So I didn't really get the bid on DRC, but on Malawi, we had a recent devaluation of the kwacha there. That was largely because of an unsustainable balance of payments position that had been built up under the previous administration. The new government, or the new head of the government that came in, had discussions with the IMF. They took some rather bold decisions that I think were probably outstanding for some time. It's resulted in a significant devaluation of the kwacha. The balance of payments pressures have eased somewhat because of that, but there are still nonetheless a major number of challenges in promoting economic diversification in Malawi. With regard to DRC, whilst I didn't get the question you asked on DRC, I think some of the similar challenges that exist in DRC have been replicated in Malawi. DRC is a vast country. There's a lot of institutional inability within the government to run parts of the country. There are problems in terms of the economic lack of diversification in the economy. So again, the exchange rate is one way that the authorities, in conjunction with advice taken by the IMF, to look at how to reform some of the issues that make investment in these types of economies less attractive than it otherwise could be to outside investors.
Angus, I want to zone in on that exchange rate because some countries, I mean, for instance, like the East African community, they were talking about having a common currency by 2012. I know that some of the countries in West Africa were also talking about having that by 2015. So when you talk about exchange rate currencies, how viable would it be to have a common currency when you do have, I mean, if you compare a country like Tanzania and Kenya, for instance, exchange rates very different in those two countries. So how would that work, and would it be to your benefit?
Well, I think in theory, exchange rate regimes, if they're pulled together by a number of countries, can work, but with the provision that there is also a fiscal union alongside a monetary union. We've seen all too clearly for the last couple of years now the problems in the Eurozone economy, where there was a monetary union but no fiscal union that then is required to underpin the common currency. So when you translate the experience that these developed economies in Europe are going through, but we must try and remember that they were highly rated AAA in many cases, and we then transfer that experience over to Middle Africa, I think there's a number of lessons that both the authorities within some of these countries like the EAC or ECOWAS are looking at, but also there's a lot of discussions going on with the IMF and trying to figure out exactly how do we create these common currency regions whilst trying to move away from the problems that we're experiencing in the Eurozone. Fundamentally, I think our belief is that without some kind of fiscal cohesion holding together a monetary union, then common currencies may not be doomed to failure as we saw with the Eurozone, but they would definitely struggle. There would be a lot of challenges to keep a common exchange rate in countries grouped together that have different economic characteristics.
Thank you so much for joining us, Angus. That was Angus Downie, Head of Economic Research at Ecobank Group.